Teaching friends to day trade has always been a thing with me. It's always been something that I've looked forward to doing. When a friend says to me, Rob, will you teach me to day trade? Will you teach me to actually trade? Will you show me how to invest in the stock market? And for the last 30 years, I've been getting this request from my friends because they see my lifestyle and they're like, oh man, this guy doesn't have to get up early in the morning and go to work and suffer like I do and all the rest of it, so I want to learn how to day trade. And I've always loved the opportunity to show my friends to day trade. And I have managed over the years to show one or two of them how to do it. But unfortunately, what you find in life is that while your friends ask you to do this, when do they get the time to actually sit with you and learn how to day trade? When do they get the time to actually sit down at a desk with you and you can show them how the charts work and the best way to go about using their psychology to win in the stock market? Because you can't show them after hours, you can't show them in the evening, you can't show them when the markets are kind of closed or anything to that effect. Besides, you want some free time for yourself as well. You don't want to be sitting in front of charts all day showing people how to trade. So while I have managed to show a couple of guys what I do and how they can do it, there's a lot of my friends that never got that opportunity. And now with this YouTube channel, you guys get the opportunity. You guys become not only the subscribers or members or whatever, you become my friends, you become my community that I can deal with and talk to, and you can teach me things and I can teach you things. And that's what it's all about at the end of the day. It's all about linking up and getting to know each other, of how we trade, what's the best way forward, how you can become profitable in the stock market. Because I just love imparting information onto people that can help them to get ahead. Now, even my own close friends that I've had for many years since school days can now watch my YouTube channel as well and actually figure out what I do and how I trade if they don't have the time to do it themselves. Because let me tell you guys something, sitting around the table on the weekend chatting over a beer and trying to show someone how to trade, it's not going to work. It takes time. This is a career. You've got to learn how to do it and you've got to get involved in it. What I used to have for my friends was a WhatsApp group. There was a group of us that used to trade together, and that was actually quite cool. That was actually great. And I see a lot of the guys now have these Telegram channels and Discords and whatnot. I did open a Discord, guys. I did open a Discord for us, but nobody's really used it. There is a link in the description. I don't know if you guys want to use it. Contact me, let me know, and I'll try and use it as to the best of my ability. Guys, don't forget, trading is risky. Trading is very risky, and if you don't like risk and you don't like losing money, rather don't trade. It's not for you. Look, we're going to go to the charts. I'm going to show you the way I trade. I'm going to show you the support and resist system again, as I do over and over and over and over again, because it's important for you to understand how the systems work. And there's a few guys out there that maybe haven't watched my videos before and they would like to know how to go about trading in the best way possible, how to go about trading price action, how to go about trading without really that much knowledge of the markets. I'll try and explain it over to them and how to get ahead. There was one guy that actually made a comment about the 4 hours and said, nah, you can't trade on the 4 hours. The stop losses are so far away. You're going to lose so much money. So that comment clearly showed me a major lack of understanding, because how many times have I told you guys in the videos, when you're working out your stop loss, work out the amount of money you want to risk first, and then you work out your stop loss and your trade and so on. But we'll get to that after the charts. What I'll do is I'll explain it in more detail after we've looked at the charts, and I'll show you how to do that. Guys, don't forget to drop down to the description, get your free Forex book. It's there for you. Just an idea. It's just fun. Enjoy it. Go and read it. And I put out the trade of the day every single day for you guys. Just a trading idea as well. It's not trading advice. You know, I don't give trading advice, just what I do, and I'm imparting what I do to you guys so that you can learn how to do it as well. For the members that join the membership on YouTube, there's a join button down there. Go and grab it, guys, because you get the video every day with the trade of the day every morning. You get the list of trades that you can take and the whole 9 yards. Right, so let's go to the charts and let's show you how we trade with price action. There you go, friends. Let's show you how to do this. Let's show you how you can trade with support and resistance. Maybe this trade's not the best to show you because this one was a head and shoulders, so always look for the head and shoulders. But okay, guys, there's 3 ways that we trade. The first way is with price action with structure, straight So this is on a bullish structure. It's going up. Bullish means up, bearish means down. Now here we go up, and it goes down a bit, goes up, goes down a bit, goes up, goes down a bit. That is structure. That means it's going up in that structure. This particular trade broke the structure. The other way we trade is in a range. When it stays in a range, it stays between the two railway lines, up, down, up, down, up, down, up, down. That's a range. The other way we trade is on maximum overbought against the trend, and at the bottom when it's oversold against the trend. Now this one overbought, okay, I don't put indicators in, I don't put stochastics, RSIs, anything like that in. I don't need it. I can see this has run hard. It's run at the top. I know it's overbought, but I don't just trade when it's at the top, because how do you know when something's at the top or the bottom? You don't. It's not supermarket. You can't say it's expensive or cheap. It can get more expensive. It can get cheaper. So what we look at is it's broken the structure. So the structure would be the trend line here. It breaks through the structure. It's broken that structure and turned bearish. Now the structure becomes a bearish structure, and you can trade in and out of this trade. We're looking, there's a range, there's your little flag pattern. What you're looking at is for it to come back into that. You take another short and it carries on going down in the structure. So that's how we trade in price action in the structure. But let's have a look at how we can trade the support and resistance the most useful and realistic way. So let's look for a product where I can actually show you this in the best way possible. Okay, this DAX doesn't look too bad. Looks like we can do something with this. So what we do, I'm going to close that off so we've got more picture here so that I can show you something that's going on right. So what you've got a bullish structure going up along here. Now you want to see if you can trade. Now you'll notice I've drawn in the trend resistance and I've drawn in the trend support. Trend is very, very important. If it hits the trend support, it goes up. If it hits the trend resistance, it comes down. If it breaks through these railway lines, the trend is broken, and then you're looking at a different trade. Now, what I normally do is take it to the day chart, and once I'm on the day chart, I have a look at what I've got on the day chart. What I've got on the day chart, it was in a bit of a range here, broke out of the range, and it's heading to the upside, clearly showing that the trend is working. Why have I drawn this in here? Well, what I do is I take it to a line chart. First of all, a line chart. Why do I use a line chart? Because on the line chart, I use the closing prices, not because on the candle charts, what you've got is highs and lows on these tails. I don't want highs and lows. I want closing prices for the day or for the 4 hour or for whatever I'm trading on. But I'm taking my level from the day chart here, because the higher the time frame, the more reliable the information. And I like the day charts information because it's the most reliable. Then what I'm looking for is my support area, which is this area here. And you can see how many times the price has come down into support and bounced back up and carried on going back up. It's more than a few times. And why do I draw it as a rectangle? Because it's a general area. No price can go back down to an exact line and turn around, because these are human beings behind the market. Human beings are trading behind the market, and these are areas where orders are left lying around. Now I would draw my resistance in, but there isn't a resistance area here. You can go quite far back. There's no resistance area in here. This is a lamp pole formation. This has just been going straight up. So it's kind of like, I wouldn't say all-time highs, but all-time highs in the recent year. So you're not going to get a resistance area here that's going to say this is where it's going to go to. It hasn't bounced off a number of times. In this area it had bounced off a number of times, and you could have drawn your triangle in here, your rectangle in here, and then it broke through. When it breaks through a price like this and it retests, it's going up, it's continuing on. If it breaks through, it normally goes to the moon. So what we've got here, it's broken through whatever resistance there was resistance here that it was hitting a few times. It broke through that. Now it's heading on up. Now the only thing that we can use to trade this now is the main support and the trend resistance and support. We're not using normal support and resistance here anymore. What we do is we watch the trend. So then we take it back to the candles, we take it back to a 4-hour chart, and now we have a look at what we've got on our 4-hour chart, because on our 4-hour chart we're trading in this trend. And then what we're actually waiting for is for this price to maybe either hit this trend support or this trend resistance again, give us a confirmed candle. So if it hits support and gives us a confirmed green candle up, we take it long. Its resistance gives a confirmed red candle down, closed, then you take it short. The candle must be closed. So that's how you trade with your trend resistance and trend support. With normal support, same thing. You see when it hits the main support, it comes out with a long green candle. That green candle confirms you take the long trade and you follow the price up as far as you can. The basis to trading, guys, is simple. And that is, put your stop losses below the support areas or above the resistance areas if you're short, and calculate your risk, as I'll talk to you about after the charts, and then take your trade from there. Make sure you put your stop loss at an invalidation area. So place your stop loss first. Say, okay, I want my stop loss here. If I take this trade below this invalidation period, I want it here, and I want to take a long trade. How much will it cost me? How many contracts can I buy for $1,000 loss here? And then work out your trade to the upside. Quite easy. If you're trading and you're looking at support and resistance like this, for example, this is a fair value gap that we're looking at here. So this will come back into this area and go up. If you're looking at how to trade fair value gaps, go and have a look at my other videos, guys. I'll show you a lot more about how you get these support and resistance levels in, and how you get these fair value gaps. If this fair value gap gets taken, it'll go up to the main resistance. When it gets to the main resistance up here, what we will do is we will wait for a red candle coming out of here, confirmed solid red candle, and then we'll take it short again, all the way back down to the support. Once the support shows us a nice green candle like that one over there, we will take another long trade with a view to it going back up. So that's what you're waiting for. But here, this is a fair value gap here, and please go and watch the video on fair value gaps. That'll explain that to you. I don't use them often, but when they are big like this, they're quite useful, because this will come back into this gap and probably go long all the way up to the resistance level. That's charting, and that's support and resistance. Easy as pie. You take these levels from the day chart, the gaps I take from the 4-hour chart or the lower time frame that I'm trading on. I also look for demand areas, supply areas in the lower time frames, just to give me a little bit more of a sniper entry into these trades, because I would like to take a long trade into this, but I only want to take it if it comes out of these order levels and gives me a sign that it's going on upwards. So now that you've been to the charts, you've seen what we do on the charts. This is the way you want to trade. Just remember, don't change the system every 5 minutes, because if you try and change a system every 5 minutes, you know what's going to happen, don't you? Because at the end of the day, what actually happens is you have a system, it works for a while, and then it stops working, and it starts losing, and you lose 5 or 6 trades in a row. You go, oh, let me tweak the system, and you go and tweak the system a bit, and it gets better for a couple of trades, and then it goes wrong again, and then you change the system completely and you start afresh, and that system works for a while and starts failing. And guys, it's not the system that's failing. All the systems work. At the end of the day, it's you. It's all about you. It's how you approach your business. It's how you approach the psychology of your trading. At the end of the day, if you don't approach it correctly and you don't have a business plan, that's where you go wrong. And as I was saying before the charts, the guy who commented that the 4-hour stop losses are so far out, and I've seen so many people with 4 hours get wiped out and whatnot. And I actually replied to the comment just stating that, you know what, 99% of traders lose on 5-minute charts, 70 to 80% lose on 4-hour charts and up. So I think 4 hours and up are a little bit better. And the reason for that is you have to understand how to place your stop loss. So if you've got $1,000 risk on each trade, if you're doing it on a 5-minute, you're almost guaranteed to take heavy losses, because you're running on a very small amount. Whereas if you put the $1,000 risk on a 4-hour chart, you got a much wider gap. So what you see when you look at the 4-hour charts is you see this $1,000. That's all you're seeing. Maybe your risk isn't that big, but you know, you want to make money at the end of the day. So you want to try and take as much risk as you're comfortable with so that you can make that money, because it's a 4-hour chart. So you need that move. You need that gap to make that money. When you look at a chart, whether it's on a 5-minute, a 1 hour, a 4 hour, a day, the movements or the type of movements in the system will remain the same on the system. It'll just take longer to play out. That's all. So you need bigger amounts on 4-hour charts than you do on 5-minute charts. Quite honestly, I wouldn't risk $1,000 on a 5-minute chart on a stop loss, but I would on a 4-hour chart, because I know I got a lot of space to risk it. So you got to risk what you're comfortable with on your risk. And this is where the business plan comes in, guys. You've got to understand that you've got to risk the same amount on every single trade and not more. And say, I want to lose $1,000 on every trade. I will pay $1,000 for every single trade, or $250 $20, whatever it is on your risk profile, whatever you're comfortable with, you can go to sleep with at night. That's the important thing. That's your risk. Then you work out how much that trade will take to get $1,000, okay, from where the cost is. So where's just, because you've already chosen where your stop loss is, right? You know where you want your stop loss. Now, how much of a trade can I take to make up that $1,000 so that I can make a profit? So now you can work out the size of your trade based on, you know where your stop loss is, you know you want to lose $1,000. Now you can work out the size of your trade above that. Then you say, okay, the trade is one contract, whatever the case, with a view to making a profit of $2,000. Because it's what I always say, you want to make more on your wins and lose less on your losses. Now there are some theories out there. There are some interesting theories out there on the effect of adding to your losses and keeping your trades going and that sort of thing. But you know, guys, I've been watching this for 30 years. I've been seeing this for 30 years, and everyone who always goes with the martingale effect, I think they call it, where you just keep adding to your losses and averaging down, those always fail. Somewhere down the line, they always fail. They don't work out because it only takes one big move, one big nightmare, and it's all gone. Goes very, very quickly. I'll take, for example, guys, you were here on Friday when the non-farm payrolls came out. I wasn't even watching the news. I didn't even know what time it was coming out because, as I've told you guys, I've given up on the news. I don't care about it anymore. But I had all my stop losses in place. And what it did is it went, took them out, okay? Some of them were in profit, some of them were at cost, some of them were in a loss. But the move was so vast that it took those losses out. And that being on a 4-hour chart, imagine the 5-minute charts. The 5-minute charts, everyone would have got taken out. But on the 4-hour charts, some of them still lived. Now, the gap is much bigger. When it takes a stop loss out at that level, that means that trade's invalid. It is gone. And most of those ones that were taken out carried on through that direction, and you probably would have lost if not double the money, triple the money, and it will carry on going that way even this week. So stop loss or invalidation points are important to your business plan. The whole point of it is, guys, you take 10 trades, in all probability you'll lose 5 and win 5. In all probability. I'm not saying your system is good or bad, or your system should have the edge, or whatever the case. What has the edge is your psychology and the way you approach your trading. As I've said to you before, a win rate is meaningless to me. I don't care about win rate because win rates can be manipulated by the amount you win, the amount you lose, and that sort of, picture. It's easy to take small wins and big losses and say I've got a huge win rate. When somebody gives me a win rate, I'm not interested in the win rate in the slightest. I'm looking at how much profit can you make? Can you make a profit in the market? I'm not interested in what you do, what your portfolio looks like, how much money you make or lose. I don't care how many wins you make, how many losses you make, how many green ones you got, how many red. I'm just not interested, guys. All I'm interested in is you make a profit. You've got to make a profit at the end of the day. And it doesn't have to be every day. It doesn't have to be every week. It just has to be over the period, over the bigger picture. My bigger picture is usually a year. Yours might be 2 years. Yours might be 6 months. But I look at a bigger picture to make profit in. And then that's what makes me profitable at the end of the day. 4 hours give you that opportunity, give you that ability to go and do your thing, relax while the markets are trading, and you can just set your trades up for the day and leave them to be. So there you go. Now you know what the best way is to trade, how to put your business plan together, and what it's all about. Teaching friends how to trade is never easy. I do this because I love to do it. I love to impart my information to you guys, and I hope it's helping you. I'm going to try and do the live show again tomorrow, and we'll do the US session tomorrow and have a wee bit of fun, guys. The get together. Don't forget to join me for that. Don't forget to pop around and have a good time with me. Guys, thanks for watching. Don't forget to watch the last videos. Till the next video. Cheers, ciao, bye.